Evening, guys. Can you all hear me? Don't all shout up at once, but hopefully you can hear me. Cool. Right. Welcome to tonight's stream, guys. Yeah, thanks for coming back, and welcome to the new faces. As we mentioned last time, tonight's stream is going to be covering ranges and channels. Now, as we've said a million times, we are range traders primarily. We're not huge trend traders. So this stream is very, very important, and hopefully you guys have had time. If you weren't on the last stream, you've watched the support and resistance module, because that's going to come into play a little bit with this stream. If not, obviously go back and watch it, and obviously all these videos you can watch again and again and again as long as you're in the Patreon. So without further ado, let's jump straight in. Ranges. Let me just double check that we've got my screen up correct there. There we go. Right. So tonight's stream. What are ranges and channels? Why are they useful? Some theory and some examples based around the theory. And obviously, like we've said a million times, it's all right teaching you guys the theory, but if you don't see it in action, then it can leave a lot of questions. So we're going to do some live chatting together. We're going to pick probably Bitcoin and maybe a couple of shit coins. We're going to run through them. And then at the end, we're going to summarize what we've learned. And then obviously any questions right at the end. This is probably a good time to introduce our disclaimer. Obviously this is in the Discord. By joining our Discord, you've already agreed to this. But we are going to be talking about potential setups and how I would have personally traded something. So obviously it's very, very useful for you guys to read the disclaimer and acknowledge it. Freeze that, pause it, do whatever you need to do, come back to it. There we go, and we move on. So let's break these things down. So first and foremost, what are ranges and channels? There we go. A range is the difference between the high and the low over a specified period. Now, some people refer to it as fair value. So effectively within the range, it's classed as fair value. Above the range, the price is expensive. So right, as we can see, the Bitcoin chart here, above 65k was expensive. Hence, we dropped. Below the range value is cheap. So therefore people want to buy. So we buy low, we sell high, and we have a range forming. Now, typically on high time frame ranges, I mean, you'll have seen a great example today as we've been approaching 50k. When you get to the high of a range, typically speaking, people get overexcited. You'll see it on Twitter, as I like to refer to the influencers. They'll get overly bullish, and that often works against them. And then at the range lows, like we saw down here, everyone was shorting into the range low. But at the time, as we were posting in the group, we had a quite clear, defined range, and well, we know what happened there. So why are channels useful? Sorry, why are ranges useful? Let's start again. Price action is ranging a lot more than it trends. Now, some might find this hard to believe, but when you actually zoom into the charts, you'll see that more often than not, price is going sideways. So we may get a big parabolic move, and then we cool off. And then we may get another big parabolic move, and then we cool off, or what we call consolidate. Now, the consolidation is typically a range, and it's finding that range that's useful to us. In my opinion, and I think a lot of range traders will agree with us, is it's actually a lot easier to trade a range because we get very clear and defined risk reward parameters. So we can see when a range is forming between two channels, a channel high and a channel low. We can long the low and place our stop loss potentially below a fib level, maybe a volume profile, maybe the last swing low, and we'll get a bit more into that as we'll show some examples. But it's typically a lot easier to trade. Now, with ranges, they help us remove our bullish or bearish bias. Now, I know we tweet a lot about this, and we like to wind people up, but you'll get people that get overly bullish, you'll get people that are overly bearish. People are still calling for 20k and below, people are calling for 100k year end. Now, when we trade ranges, we don't need to worry about that. All we're worried about is the current time and shorting the highs and longing the lows. So we don't have to be bullish or bearish. Yes, we can use that to our advantage to think what's likely if we're going to break up or we're going to break down, but it keeps us neutral. And being neutral is going to be part of the psychology course later on, but it's one of the best things you can do in trading. And I suppose the final reason why they're useful is because we can use them intraday and we can use them for multi-day, multi-week, multi-month trades. So for example, anyone that managed to short the high, we can now call this a range, and you took profits all the way down. And obviously this lasted a long time, so this isn't an intraday, this is a multi-week to get down to this level. And the same with playing it back up again. Let's go on to some examples now so we can actually see what a range looks like. Now, I know a few of you guys are experienced traders, so this will be no surprise, but let's just break things down. I've got a few notes here to run over with you. So, in a range, this is complete theory here. Let's just hide the Bitcoin price there. So, within a range, we have a range high, we have a range low, and we have a midpoint. Now this is crucial. Now to draw a range, we'll run through this a bit later, but we use this tool here, and I'm hoping you it's not cut off on your screen, but if it is, let's go up here, and we see the parallel channel, and we'll show you how to use that a little bit later. And this parallel channel gives us one line, two line, and a midpoint. Now, the range highs and the range lows can be mapped out on several things. So this might be a daily level, and this might be a daily level. So we've got a range forming perfectly within two daily levels. It may be within fibs, so this might be a golden pocket up here, this whole line might be a golden pocket, and this line down here might be a golden pocket, 618 to 618. Very simple, but again, we'll cover the fibs and everything later on. Or volume profiles. You'll see every day in the Discord I'm posting volume profiles, previous day value high, previous day value low. Again, that could be considered a range if price action gets stuck in there. So there's many ways to chart one of these out. But the key to the whole thing is getting in there early. So what we want in a range, in a sideways range, ideally what we want is four confirmed touches. So in my example here, price has risen up, touched, one. Bullish move up, and then it's quickly rejected. So we've got two. Down, slight swing failure pattern, 3, 4. Now within this, you've now got a confirmed range. So we can now continue to trade this. If you're very aggressive and you have some really good confluence down here, you may trade off number 3. It's higher risk, but it's still doable. And this is effectively a sideways range. Now, how we trade a range, and we'll show you more on some live examples later, but what you've got here quite clearly is if, for example, this SR level is a daily and we've broken into it and we've got high volume, broken through, back test on low volume, and then we're starting to see signs of high volume pick up again now and open interest and everything. So we may take a long position down here. The midpoint we take 50% of our profits. Now, you don't have to take 50% of your profits, but in my strategy, in my system, I take 50% of my profits at the halfway point. At that moment, I move my stop loss to entry, and I let the rest of the 50% ride, hoping that we get the top of the range. Now, we get the top of the range, and I will personally take another 30% off, because the range might break. The range might push through and we carry on moving up, and it might be a trending day, for example. So I will leave 20% in the trade. Now, if we see a clear rejection and price is going back down to the midpoint and we lose the midpoint, now you've got two choices here. You can either close your trade out completely and you're still in profit, or wait to get stopped out. Now, if you get stopped out, that's 20% of your profits that you've potentially walked away from, but it's still a winning trade because you've got 80% of your profits on the run up here. Now, we've seen this action play out and we come back up to the range high again. Now we might decide to take a short here. So we've got a long again from here, and we've taken 50% and we've taken 30%. Now we might decide to enter a short. Now this is where hedging comes into play. So we can have a long position and a short position at the same time. Exactly the same scenario. We play the short, 50% profit, see the bounce, comes down, we take another 30%, and we can let 20% ride, just in case the range breaks to the downside. Now, what we've got is, I've covered the volume profile here, so I suppose the final thing to mention with this is what we call a partial rise and a partial decline. Now, a partial rise or a partial decline can be considered weakness. So, we've risen up, we've hit the top of the range, we've come back down. We've swing failured your lows, we've entered the range, we've back tested it, and we've moved up. So we've only moved to the halfway point here, but it's okay because we've taken 50% profit and we've got stopped out at entry. Now, this is what you would consider a partial rise. Now, this obviously could be considered bearish because it's not had enough momentum to get to the upside. So that may start to affect our bias, the range breaks down. Doesn't have to. Obviously, volume, open interest, all the things that we show you in the Discord does come into play here. But it's something to note as a partial rise. Now, sometimes you get the partial rise. For example, if I pull this one down here, that would be considered a partial rise. Now this, we're not going to chase an entry on a short, because the moment that we chase an entry, we've now got to move our stop loss a lot higher, which doesn't give us the best risk to reward. Yeah, it still could be a healthy trade, but what if price just comes straight back up? Swing failures and back down. So this is where patience comes into play. We want to wait to see price come up to our range high. We don't necessarily want to trade the swing failure up here. We want to wait till it comes back into the range and back tests it. Trading a swing failure pattern takes a lot of skill, a lot of practice, and you've got to understand volume specifics on that. So let's go to this. So that will be considered a partial rise as well. This and this, which could be a sign of weakness on the bullish side. You could also have a partial rise on the bearish side. So this price action's come up, we've taken our profit, it's come up, it's come back down, and we've seen that it's not actually hit the range low. It's been front run quite considerably. Now you could see this as bullish because there's a lot of updrive forcing the price up before it's got to the range lows. Again, if you see this, you may consider moving your short stop loss into profit. That way, it's a very profitable trade still. Or if you want, you can leave it and see what happens afterwards. It's fine. Either way, you've taken profits and you've moved your stop loss to break even. So that's an example of a sideways range. I suppose the final point to mention on this is you'll see us harp on a lot about why we don't trade breakouts. Now, the range is the reason why we don't trade breakouts. So, for example, price has broken out here. We've seen it, price has broken out. Now, the beauty of this is we've taken a long from here. So let's get a long position. So we've taken a long from down here. Obviously, we've taken profit at 50%. We've moved our stop loss to break even. And if this genuinely did break out, in fact, we'll use this example over here because we do break out. So we've taken 50% profit. We've moved our stop loss to break even. Now look, price is broken out. We don't need to trade this breakout because we're already sat in a comfortable long. Exactly the same if this was short. You're already sat in a comfortable long. So yes, you may have taken a short up here and you've been stopped out. But out of 1, 2, 3, 4, 5, 6, 7 trades, you've now lost 1. So out of 8 trades, you've lost 1. Now that's a pretty good ratio. You've got to be comfortable with taking losses. So you'll hear a lot of people say, trade the range until it breaks. You'll only be wrong on that one trade, but you will have made money all the way through. So that's a sideways range. Now, this one is a channel or a diagonal channel, whatever you want to call it. So similar principles to a sideways range, apart from this is when price is trending. So all you need for this one, rather than the previous sideways range where ideally you want 4 touches for confirmation, ideally 2 on the top, 2 on the bottom. When you're coming into a diagonal channel like this, you only need 3 realistically. So price has risen up, 0.1, drop down, 0.2, up to 3, and we've got a rejection here. So now you can say, yes, we've got a confirmed channel moving up. Now, these levels may coincide with daily, weekly, monthly supports, fibs, it could coincide with anything. But we can use that to our advantage and play the range. So exactly the same concept. So you've seen this price has come down. Let's say you've taken a long down here. And you've taken a long because price action's broken up and it's back tested, I don't know, let's say a weekly level. So let's say we've got a weekly level here. So you've taken a long. Now, exactly the same concept as the sideways range. No idea where that went. Let's try again. And it's still gone. Strange. Where has... Yeah. Anyone know? I have no idea where that's gone. No idea. Strange. Right, let's try. Oh, it's disappearing. Okay, very strange. Anyway, moving on. Technical glitch. Say we've taken a long from down here. We've entered on the backtest of a weekly level, and we've taken a long. So price has risen. We've got to the halfway marker. Again, we take 50% profits off. We move our stop loss to break even, and automatically this is a winning trade. If price rejects here, drops straight back down, we've still taken profits. It's a winning trade. That's not a losing trade in anyone's book. And this is what you need to grasp the concept of. That's a winning trade. You've taken 50% profits. That's winning. Your overall portfolio has grown. We see the price break through the middle of the range, back tests, and comes up. Now, again, we take another 30% of the profit off. We leave 20% in the trade, and we let it ride. Now, this works a little bit different now because we're in an upwards channel. And 0.3 has confirmed it. So at 0.3, we take a short. And again, it's going to do that weird thing again. Ooh, I think it's because it's before price action. There we go. Let's just do it from here. Ooh, strange. So we've taken a shot here. We'll play it down. And we've played it down to the center point. We've taken 50% profit. And we're playing it down now to the bottom of the channel. Take another 30% profit. and we've got 20% in the trade just in case we break down. Again, we take another long, and so on and so on. I'm not going to go through every single example because I'm pretty sure you guys have grasped that already by now. But again, we trade this parallel until it breaks. Price action may swing fail it. We wait until it comes back in, retests it, then we take a long here. Same here. Price has broken out of it. It's come back in. It's retested it. Then we take a short here. Now, one thing I'm going to make very, very clear when it comes to ranges and channels is we're not going to trade them by themselves. We need, like everything I do in trading, we need multiple areas of confluence. The more things, more reasons to take that trade in that area, the better. The more high probability the trade. And that's something you've got to grasp. If it's just a channel by itself on a chart, there is no way in hell I would trade that. No way. I need multiple reasons. Now, I suppose it's probably a good time, isn't it, to jump in to some live chatting. So now, obviously, it's been mentioned in the Discord today about the current range on Bitcoin. So let's zoom in. So let's start on a higher time frame range. So let's get our range tool. So this is what I mean by we can use ranges on high time frames and low time frames, and that can determine a swing trade or a intraday trade. So let's use this an example. So I'll draw a line here. Now, obviously, you've got a wiggly line. You've created your first point. You've moved over here. Now, if you want to keep this perfectly straight and perfectly flat, tip, keep your finger on shift. No matter where you are, it'll make it straight. It's good for drawing perfect channels, and I'm quite anal about this. So we'll draw a channel. Now, admittedly, I'd say I'd prefer it like that. Now, like all TA, it's an art. It's not a science. Each chart's going to be completely different. For example, the Bybit BTC inverse swap is going to be different from the USDT pair. Binance, chances are you've probably got like about 15 stray wicks down here because obviously it's Binance. But it's an art. So what we've done here is, as we can see, we've drawn it from the top. And we can see we've got a center point touch here off that first drop that we had. And we've got the lows. We've swing failed the lows 1, 2, 3 times. And oh, look at that. Broke through the midpoint, back down. Through the midpoint, support, support. Oh, broken back through, resistance, resistance, and so on. So we can see that it's actually a valid channel. Now, obviously, I don't expect anyone to have taken a short up here. That was very, very, very technical. Obviously, you guys know that we were banging on about it on Twitter for ages. But I don't expect anyone in here to have taken that short. Except, yeah, it was amazing, was that? But again, if you did, then you'd have taken the shot. And would have traded it down, and we'd taken 50% profits down here. Now, it's a little bit different with such a large-scale trade like this. And obviously, we didn't know this channel low was in. Obviously, this would have been other areas of confluence, which this was a nice 618, by the way. But in this hindsight trading, shall we say, you'd have taken 50%, you'd have seen it reject, and then you'd have let it ride. And again, I don't expect anyone to have taken this trade because this was quite technical. It came down to a perfect 1618 extension. But that'd be one. Obviously, you could have longed this and hope for the best that we'd have got back onto it, but not a great example, I suppose. If we zoom down and we go to the, in fact, let's just start this again, the one range to rule them all that we all love trading. So, prices come down. it's risen up. Now, what we could say is, basing it on the daily level, we could say click, shift. Now, because we knew about this low here, so let's play it off this low here. And this is how the original range started. Now we based it on daily candle closes at the top, because this obviously created a daily level right here, because obviously we're on the daily chart. Scissor top, daily level. So we've already got one in here. Now we knew that price action came down here and stopped and quickly got bought back up again. So you could say that this was a strong support. Now, funnily enough, just doing a really rough channel like that, you can see that we've got reaction at the midpoint, reaction at the lows, reaction at the highs. Now, once we came to this high for this final time, we never actually revisited the high until we broke through. So you could say that this was a sign of weakness. And if you remember at the time, everyone was getting extremely bearish on Twitter. Many Discord groups, exactly the same. Everyone was getting super bearish. We had a few influencers mentioning no names. We're shorting here. But for us, as experienced range traders, why would you short the low of the range? If you wanted to short the range, you'd have shorted either here, or if you caught it at the midpoint. And that's purely because we had a beautiful test of the golden pocket, but that's by the by. So we're long, we're short, we're taking 50% at the midpoint, and we just keep rinse repeating. And now eventually we realize that this range actually pulled in a little bit to here, in my opinion. Swing fail, swing fail, swing fail, which again is why everyone got bearish. But moving this range up higher, we can see now. So, okay, we missed this trade because we were hoping that price action was going to come down here. It's not the end of the world. We might not necessarily have taken the short. We've missed this trade, but now we've found that we've got more support here. So we can move our channel up. Because obviously that's what the information that we've got at the time. Now, so we missed this trade. It comes back up into our daily. We take a short, obviously. Moves down, 50% profit. Comes back up. Doesn't take us out. It doesn't take our stop. But then price eventually comes back down the range low. We place a long. We trade it up. 50% profit. Let it ride. 30% profit. Hope that it's going to break out. It doesn't. No problem. We take another short. So therefore now we are long and short at the same time. So we've got a long here. We're going to put our stop loss just below the range lows. Give it a little bit of breathing room if you like. And we've long this right up. Now we're still sat in this 30% long. There's 20% in the trade now because we've just taken another 30% profit here. So we're still sat in that long. And this is why it's good either to, for example, with Bybit, I use the BTC inverse swap. And I use the USDT pair. So I'll use one for shorting, one for longing. I also have two other accounts as well, which I'll use for swing trades or intraday trades, or scalps as well. So this is why it's good to have a few accounts if needs be. Or if you just want to use one account, use the inverse swap and use the USDT pair. Use them against each other. It's great. It means you can open multiple trades at once. So now, we swing failed this. We've now taken our short. Well, we don't need that much of a stop loss. And realistically, let's put our stop loss above these swing highs. Now again, we've taken 50%. We've now taken another 30% and we're letting it ride. Now we see it break out. Now it's up to you. You could potentially skim off a little bit more profit as you've seen it come down here. But we did find support and came back up. It's completely up to you. But obviously, either way, it's a winning trade. So we can move our stop loss to break even at the midpoint. Let it ride. Let it ride. If you see that we'll come back up to the midpoint again, you might want to close the rest out or leave it open just in case it breaks down. Now, once price action comes back here, you're now stopped out. Winning trade. So either way, fantastic. So we've longed that up. We left part of it open. We've shorted it back down. We've left part of it open. We've now been stopped out of this one. So now we're only going to short. We see price action come back into the range. Now, if you were aggressive, you could have longed this, or you could have waited for a back test. So we place a long, exactly the same, just rinse, repeat, guys. It's once you get into this mentality of a range, it's so much easier. Now, I know this is hindsight, and we'll use the more recent price action, but it's honestly, it's so simple. Rather than just longing and hoping that price goes up forever, up only, or shorting and hoping that it goes down forever, by identifying a trading range, i.e., you've got a clear daily here, clear support down here, trading becomes a lot easier. You don't have to worry about the bears saying 10k. You don't have to worry about the moon boy saying 100k. Just trade what's in front. It's so simple. So this trade, you got 50%, and it never got beyond that. So obviously price has come back down now. You've now been stopped out. Price has come back in. Now on the lower time frame, let's get down here. We'll back test it. We'll break out, we test, we come down, we'll come back in. Even on the 4 hour, we don't really back test it, I'll be honest. Yeah, you could have been aggressive here. So if you'd have seen the volume increasing significantly, open interest increasing significantly, new longs opening, then you could have been aggressive and you could have placed a long there. But that'd have been, in my eyes, a very aggressive trade. Now, as you know, at the time, we were longing down here, but that was based on a swing failure pattern that we're all looking for. So we've got another trade here. Let's move back up to the daily so we can see what we're doing. Now, this one is your breakout trade. So we've taken 50% profits at the halfway mark. 50% profits at the halfway mark. Another 30% at the top of the range. And we get rejection. Yes, we've taken a short there as well because we're still within the range. Now, this short didn't actually work. So this is our losing short because we didn't get to 50% and we got stopped out. So we lost on this. That's our one losing trade out of all the traders that we had in here. But the beauty of it is we're still in this. And we're letting it ride. And we're still letting it ride. We're still letting it ride. And we might take some more profits when we saw, for example, as we all know, we came into the golden pocket, so that would have been a clear TP. And as you know from that huge long that I still hold, that was a good TP region. So that was the beautiful range. Now, obviously, these were more swing trades because obviously this is a range based on a daily time frame. So these were swing trades. So obviously this took multiple days to get to each point. Now, what we can do is clear all this off and look at how we can use a range on an intraday. So in, out, in, out. Now, we've had a couple of good ranges. Now, this was the past week's price action. Now, this was a great range. In fact, one of the Discord members, Mushy Dave, big shout out, mate, he identified this range quite early on, and it was great. So we're on the 15-minute chart here. Price, short squeeze up. We'll come down. Now, we could argue that this is now a base, and price has now risen. Let's click it in. Price now risen, and we've rejected here. Now, straight away, we can see a range. Now, obviously, we didn't know all this existed. So let's just pull it back a little bit. We didn't know this existed. So we might not have taken this long here. We might not have taken the short here. But we've got 1, 2. We've seen a midpoint. 3. Now, for an aggressive trade, you could have shorted this. And to be fair, it actually worked because price action never took out that high. So this is on an intraday. So obviously we're on the 15-minute chart here. So we shorted this. We give ourselves a lot of room to breathe. I mean, that's 1%. You know, if you are using leverage, you can still use some decent leverage. 1%, it's not huge. Obviously, as long as you're using correct risk management and use the calculator that I give you guys, you can work this out and you don't have to think about it. So we play this down to the midpoint. Now, it doesn't actually hit the midpoint until, let's move it along, here. So we take 50% profit. We've still not been stopped out at these points because it's not gone beyond our entry. Plus, we've not moved our stop loss to entry yet because we've not taken any profits. Now, we've seen midpoint, so we take 50% of our profits here. Now we move, break even, and we let it ride. Now, we see that we only get a partial decline, so that's bullish. So we're not going to chase this long here. And we let price action move, and obviously, as it uncovers, we get a huge push up, back down, back test. We could have taken a short here. Now, admittedly, obviously, how I've drawn this channel, I'm slightly out. But if we move it down slightly, you may have got a back test there, depending on your own parameters. Short here, 50%. Stop loss to break even, and we didn't actually touch the bottom of the range channel here. So we might not have had a perfect long. That was that range. Now, you could actually draw this range very different. Now, you've seen the reaction here. What you could actually argue is that that is your range. If you guys can see that, we've now got halfway, bottom, top. It's a tighter range to trade. In fact, it's only a 1.73% range, so it's not a significant range. But for a scalper, you may want to trade that intraday. Let's move to today. So we actually had a lovely range forming today, which I've been trading all day, and obviously we broke out of it to the upside. But we had a wicked range. Anyway, here. So, 15-minute chart. We came into resistance, which, if memory serves, that resistance was a 1618, yep. Which is why I personally took this shot. Played it down, 50% profits. Played it down, another 30%, and we longed it back up again. And we just rinse repeat. It's quite simple once you know what you're looking at. Now, you don't have to be on the 15-minute chart. You can be on the 1-hour chart. You can find a range on most charts, on most time frames. In fact, you can find them on all time frames. If you want to be a scalper, go down to the 1 minute. Well, the 1 minute, it still works. It doesn't matter what time frame you're on. It's whatever you're comfortable trading. Now, the 1 minute does get your heart rate pulsing. I personally don't like trading the 1 minute. But once you make it a little bit more simple, even the 5 minute, no, it's clear. It's very, very clear. It's very, very obvious. So that's Bitcoin. Let's pick a shit coin. In fact, have I got? Yes, I do. Right, Phil. Now, I don't know if you guys have traded Phil before, but between me and Flying Dog, we used to have a bit of a laugh about Phil because this was range bound for so long. You can see automatically without me zooming in how range bound this price action is. So we're on the daily here. Let's zoom into the 4-hour, in fact. There we go. Now, yeah, as I said, between me and Flying Dog, we really enjoyed this range because it never broke out. And if it did, it swung failed and came straight back into the range. So, what we can see here. Let's draw it like this, shall we? I may readjust it afterwards. But for now, here we go. So, again, I've drawn this range on. Now, what we need to make sure that the top of the range and the bottom of the range line up with something else. We're not just drawing random lines on this chart. But as you can see, how I've drawn this, we've got good reaction between the midpoint, the lows, the highs. We swing failure every time, and every time it rallies, it dumps. And this was the beauty of fill. It's a lot of money was made on fill. So we've come down into the range. We found some support. Touch 1, touch 2, touch 3, touch 4. Now, as I've said before, you could be aggressive. You could say that that's touch 1, that's touch 2, that's touch 3. We've seen the swing failure. We've come back in. We've back tested it with some force. And we could potentially take our first short there. Stop loss above the swing. 50% profit. Next 30% profit. Let 20% ride, just in case it dumps. Now, we see clear rejection here. Now, volume and other volume metrics come into play here. But obviously, we're a lot of shitcoins. We can't use the footprint charts like we use. So we're relying very much on the volume bars, which is fine. We can trade from these. So we've now placed a long because we've seen that we've got support. So we've now placed a long. And let's zoom up here, shall we? There we go. So let's move our stop loss to below this swing and this swing. 50% profit. Traded it back up. Now, bear in mind, we're still in this short, which has just been tapped out here. We've taken 50%, 30%, let 20 ride just in case. And we short it back down again. And we just rinse repeat. It really is that simple. Wow, huge stop loss. Rinse repeat again and again and again and again until it breaks. I mean, with this one, it's so tight because it happens so quick. Another long from here, and we go up. Now, again, we've seen it's broken out of the range. We've still got 20% in. Now, we could say, yeah, fair enough, this might be an important daily level. This might be a weekly level or a monthly level. So we could decide that we want to skim another 10% of his profits off there and let 10% ride. So you can still make money on the breakout. And again, rinse, repeat, short, long, 50% profits. Now, on this one, you may not have got stopped out because this didn't come back down. It may not have stopped you out if you were ballsy enough to stay in there. And then you've got your breakout. So now you're a breakout trader because you longed the bottom of the range and you may have caught, even though you didn't have much skin in the game, a 153% move here. Now that'd have been beautiful. Even without much skin in the game, that's still a lot of profit, more than what you would have had in the range. Or what you may have done is, for example, if, say for example, the range was a little bit tighter. Let's say the range is here, and you've taken a long here. So you've taken this long. You've taken your 50% at your halfway mark. You've moved your stop loss to break even. Now, you've seen that price is now partial decline, potentially bullish. You've seen that volume and open interest is increasing. We've got back above the 50% mark. We've now retested the 50% mark. What you could do is you could compound your long. So you may want to take some of your profits, not all of your profits that you've taken on your 50%. You may only want to use 25% of them. Compound them back into your trade, which automatically is going to obviously move your entry up. So it's a little bit higher risk, but you can keep a tight stop loss. Now you've got a little bit more skin in the game. So because we've witnessed the partial decline, we're thinking bullish, we're thinking volume's increasing, price is slowly going up, we've not lost the midpoint, we've compounded profits, and now we've seen the break. We've seen the break, high volume, in fact, guarantee that was high volume. Wow, we actually broke out on low volume. Broke out on low volume, came back down, and then obviously we've seen the volume come in here. So on this note, you're feeling quite confident. The volume's increasing, the open interest increasing. Wow, all of a sudden you've got yourself a wicked trade. And what did that run into? Quite possibly nothing. No clear reason. Unless it's on an older chart perhaps. Or the Bitcoin pairing may have had some resistance here, which we'll talk about in another video. So that's how we trade a range. Now, let's look at a channel. Is everyone keeping up? Yep. Cool. Right. Let's go back on here. Because we did have a nice channel on here if memory serves. Let's get rid of all this stuff. In fact, I believe, was it here that we had a nice channel? Was it this one? Yeah. Let's zoom into the 4 hour. There we go. So, a channel. Obviously, price is trending. So obviously we had that significant drop. Bounce, back test. It found support. So we've got 1, 2, 3. Now, unless you had other areas of confluence down here, I wouldn't have taken that trade. But we've seen prices come up, and now we find clear resistance. We can see we've tapped it so many times. So we take a shot. 50% profits at the midpoint. Let it ride. And we already knew that this was the low of the channel, so we take more profit. We take the other 30% and we'll let 20% ride just in case price does crash through. Now, what we could do at the same time is take a long. Now, bear in mind, this is a downwards channel, so now we're trading against the trend. So we don't want to be greedy. We don't want to necessarily be holding on to things forever. But same concept. Midpoint of the channel, take 50%. We wait for the high. Now we've taken 50%. Stop loss to entry, and we'll let the rest ride. Now, we never actually come back down here because we found a new support. So therefore, we don't get stopped out. We don't get stopped out. We come up, and realistically, where we break out is pretty much on line where we took our 50% profit. So we might not necessarily take more profit here, but we then did witness a breakout. So from here, you're now riding the train. Nearly 30%. That's a significant move in Bitcoin terms. If that was a shitcoin, that might happen in 15 minutes, but in Bitcoin, that's significant. Obviously, it's happened over a period of time. And you may have taken more profits, as you've seen. Obviously, we've come in quite clearly. I mean, you can see it here. We've got another channel. See? So we may have taken more profits because we've seen this happen and we take some more profits at the channel high. Obviously, we've got quite clearly resistance. And again, we can then talk about range trading again. But that's the method of doing a parallel channel. Now, it's just about spotting them. You can literally sit here for hours and draw channels, and eventually you'll find one that works. You know, it doesn't have to be perfect. Yes, sometimes it might wick through, sometimes it might not wick through. I mean, just out of curiosity, we've got one here. They're not that difficult to spot. Once you get an eye for it, and obviously you use your anchor points, you use your magnet tool here that you can see. Use your anchor points, and it makes life easier. We can see it now, look. The bottom of the channel now, after breaking through, it comes back a bit, back test the channel, and then we drop. Could have been a short entry if you'd have spotted it and you had enough reasons. Obviously, we know that this was the golden pocket, etc., etc., etc. But there we go. Where else can you find them? Let's randomly look, shall we? Oh, there we go. Another one. When's this? August 2020. Prices come up. Found resistance. Dropped to here. Now, we could argue that that's the range low, or we could wait for price to come back up, back test, and now we could say that that is the range low. Now, we've not necessarily entered a short here unless we had other reasons to take a short, so therefore 1, 2, 3. If you're aggressive, you could have taken a shot here, or you wait, down, back up. There's his 4th touch. Doesn't always have to be to on either side, in my opinion. Most will tell you that it does, but if you're a little bit more aggressive, then we're quite clearly seeing it's broken out and come back in. In fact, this range looks awful familiar to what's happening at the moment. Come back in, retested, we take a short. 50% profits, stop to break even, comes down. We don't fully see the bottom of the channel to take the short, to take the long. Comes back up, stops us out. But what we could do is we could say, well, we're back into the channel high. Let's place another short. Why not? So we've now taken another short. We've seen that price has risen up. As we're getting close to the range high, volume's starting to drop off. We're starting to change direction in open interest. We're starting to see new shorts opening. We're starting to see open interest increase. So we take the short. Exactly the same. 50%. Take them. Boom. Boom. Down to the lows. And to be fair, you didn't even have time to think about this. You're taking your other 30%, and then we just tanked. It's very, very simple once you start drawing lines. Just draw lines. It's very hard to get them wrong. Oh, unless you're clumsy like I am there. Potentially, have we got one there? Yep, you could argue that we do. There. Well, we've got a diagonal channel. Center point. And this is what I mean. I've not pre-planned this, guys. And I just want to make that really, really clear. I've not pre-planned this. Obviously, the main range at the bottom, yeah, fair enough. And the range from today, yeah. But that is literally just having a quick look at the chart. We've got trending price action. We're going up. We're making low, high, 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 low. Arguably not high, high, but high, high here. High, low, high, 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 low, high, high. And rinse, repeat. So we can see that we're trending. We're trending up. So just pick a couple of points and literally just draw them. If it doesn't work out, it's fine. Click it, delete it, draw another one. It really is that simple, and that's half of what TA is all about. It's just keeping it simple. Remember the pullback before the main breakout, once we broke out from 20k? Again, you could probably, let's use the right buttons. Have we got it? Does it work? Does it work? Yeah, it works. Look. 1, 2, 3. If you're aggressive, you may have taken that. You didn't get to the 50%. So you're letting this ride. Your stop loss is obviously up here. So you're still in the trade. Oh, 50% profit. Great, cool. Stop loss to break even. And then we broke up. Now, this is probably the only exception to the rule of when I trade a breakout, because we were at the point of all-time high and it was very obvious watching the volume come in. So I did actually trade this breakout. The one of the only times you'll ever see me trade a breakout was this one. But that's by the by. I actually closed my long because I wasn't confident in that, if I'm being honest. That's that. Now, I'm hoping that all makes sense. You can do it on, as I say, high time frame, low time frame, the minute chart if you really want to. But it really is that simple. So let's get back to it. How are we doing for time? An hour. We've not done bad. Summary. Let's go through the summary. As we mentioned throughout this whole video, price action ranges more than it trends. Use this to your advantage. A sideways range, ideally 4 touches to confirm. If you are aggressive, 3 touches. Diagonal channels going upwards, 3 touches to confirm. If for example, if you're going upwards, we've got the high, we've got the low, we've got the high. Or if we're coming downwards, we've got the low, we've got the high, we've got the low. I wouldn't be overly aggressive on trying to trade a diagonal with 2 touches, because unless you've got multiple other areas of confluence, it's that's a risky trade, and obviously we're trending, so it's a little bit different. The real simple way to trade a range, it's so simple, it's almost stupid. Short the highs, long the lows. Rinse, repeat until it breaks. When it breaks, that's the one trade that you're wrong on. However, you don't need to trade the breakout because you are already long or short from the range low or the range high. Just remember that. Breakout traders, as we even saw today, like 3 or 4 times, breakout traders are getting wrecked. Absolutely wrecked. Because the same price breakout, whether it's a triangle, whether it's a pattern, whether it's an SR level, I would never trade that breakout, because I would hope that I've got an entry on a long or a short, lower or higher. If I don't, it's fine. It's no trade. You don't have to be in a trade at all times. If you miss a move, I don't know if I've missed a move tonight. I may have done. I was in a short, but I may have been stopped out now. If I am, fine. I'm no longer in a short. I'm still in my short from up here, but I'm no longer in an intraday short. It's fine. I don't mind, because there's always going to be something. Maybe tomorrow I'll get a short entry. Maybe tomorrow I'll get a long entry. You just don't know what's around the corner. So you trade the range until it breaks. 50% at the midpoint, stop loss to break even. And then it should say on here, 30% at range high or range low, and leave 20% in the trade. Now that part is up to you. You may want to close it when you get to the top or the bottom. I wouldn't always advise that, because then you might miss the breakout. Or you might want to take 25% once you get to the range high or the range low, and leave 25% to ride. But don't forget, profit is only profit until you've banked it. So until then, it's paper. So for me personally, and I'm quite risk averse, I need to ensure that I'm locking in profits, because that's what pays my wage. That's how I make my money. So therefore, I take 50%, then I take 30%, and then I let 20% ride. That's kind of my moon bag, for example, as some people call it. Many reasons that a range could form. It can form between different levels. It might be a high time frame support resistance level, maybe a fib, maybe a volume profile. Again, we're going to cover that later on once we get into more advanced topics, but you will see me posting about this day in, day out in the Discord, so you'll probably be picking up things all the time. Or sometimes it might just be like one of the channels, for example. You might just draw a couple of lines and figure out that they line up. That is still a valid range or a channel, but you do want other areas of confluence there as well, ideally. And I suppose finally, as we said right at the beginning, people typically speaking, at the top of the range, they get overly bullish, they get greedy. The bottom of the range, they get awfully fearful, they get scared, and they're short. So they're shorting into your longs. They're getting greedy and longing into your shorts. Use this to your advantage. This is why we can take the piss out of the guys, out of the influencers all over Twitter, because they don't understand how to trade a range. They call it chop, but for us, it's money, it's profit, and it's the easiest profits you can make in trading. And you probably tell how I'm trying to stress this, because it's so much easier trading a range. That way, you don't have to be bullish, you don't have to be bearish. It's just dead straightforward. It's almost robotic. Take the trade. If you lose, you lose. It's fine. You will lose some trades, but you will also win more in a range, as I clearly showed you with those examples today. And that's it, guys. I am amazed I managed to get that within an hour. So let's open up to questions. What we got? Anyone got any questions? All right. Do you have? In fact, let's make this visual for you all. If I'm hoping this works. If not, there's one one question. Do you have a specific order for looking up confluence? Not really. All my TA is done daily, and I have levels of interest, and I've already mapped these things out. So I will always look, as I mentioned before, I will look for multiple levels of confluence, but I don't have an order for looking for them. So sometimes it might be a range value high, it might be a previous day POC or a naked POC, and a golden pocket. Sometimes it might be a weekly and a golden pocket. There's no real specific order with it. So I'm sorry it's a bit of a wishy-washy answer, but that's the that is the answer. Yeah. Next question. Now, I did say I'd ignore some of these questions, but it is fitting because obviously some of the ranges I've drawn them out on candle closures, some I've done on wicks. So, do you wait for the candle close to get into a trade, or do you just enter when price actions at the ranges? When price actions at the ranges is the short answer. I'm not one, and I'll cover this in probably a later video. I don't need to wait for a 4-hour candle closure to confirm something. I'm looking on volume specifics, so which means I can react quicker than some other traders. For example, like oldie traders that use, I don't know, they might use EMAs and other moving averages, and that they're stuck in, I suppose, quite an archaic way of trading in my mind, where you got to wait for the candle closure. For me, the only candle closures that are important are high time frame. So daily, weekly, monthly, yearly, quarterly. They're important closures because that will create a new SR level in my eyes. But for anything less than that, I'm not bothered. I will enter that trade. If I see price coming to the level where I want to take a trade and the volume's right, the open interest right, I'll take the trade. I hope that answers that one, mate. Salves in. Hang on. I hope you guys can see this, by the way. Let's get rid of that. When do you start to consider a range broke? Good question. Right. Now, this is going to go into volume specifics a little bit. And I'm not going to go too much into this. But, for example, today's range. Let's bring up volume. Ignore the VWAP. In fact, let's just hide the VWAP. So, today's range that we had, as we pointed out earlier, just for easy, for ease, I'm just going to draw it like this. Now, what we've seen is we've taken our long, price has come up, we've taken 50%, we've taken 30%. Now, what we've seen is we've seen a rejection, we've entered a short, and then all of a sudden, we've seen the next candle open, we've seen volume significantly shoot up. Now, looking on the footprint charts, or for example, looking on the website that we gave you in the resources section that shows open interest and CVD. So you could use that. So we've seen that volumes increasing, we've seen open interest increasing, we've seen it break. Obviously, we've had a pullback, and ideally in this world, you'd be looking for a back test. Now, technically, we did get a back test. Looking at that, we're going to back test here, and it's held. Now, on the back test, you want to see small volume, and look, I'm hoping you guys can see this. So we broke out massive volume. We've kind of just stood in no man's land for a little bit because obviously everyone's in a little bit of disbelief. We've broken out of a range. It's great. And then all of a sudden, things pick up again. So now we drop back down. We back test, but we've back tested on low volume compared to the breakout, we can see. And we've closed in what you would call a bullish candle. So obviously this candle has opened up. It's moved down first. It's then moved up and closed here. This is a bullish looking candle. And now, again, ideally what you'd want to see with this is you want to see volume and open interest increasing as we carry on moving up. Now, we're actually seeing it taper off, which means there's a little bit of uncertainty there. Obviously, the foot principle tells a clear picture, but right now we're seeing uncertainty. So this is now breaking out, and we're breaking out on lower volume. So I'm cautious about this. This could turn around and this could absolutely pump. Bear in mind we're only halfway through this candle, so this could shoot up here. But that's how we use volumes to determine breakouts. So that's that. Hang on, guys. I'm gonna have to take a drink before I choke to death. There we go. Sorry about that, guys. Right, that's that one. What's next? Right, Hula, I'm going to ignore your second part of your question, mate, because that's not really on today's topic. However, this one, let's have a see. What we got? Can you account the touch points of a range to predict a possible breakout? Average touches, of course. This comes with experience. In a range, you can, for example, if price action is bullish and we've come up and we've ranged, like for example, if we consolidate here, we could quite easily push up again, or we could swing failure and come back down again. You can't really use it to predict a breakout, and to be honest, ideally I want you guys to not worry about this part. Don't worry about the breakout, because this is all part of the strategy. So obviously we're long in the bottom, we're taking 50%, we're moving stop loss to break even, then we're taking 30% at the top of the range, and we're going to let a little bit ride if it does break out. But what we're not really concerned about is the breakout. So kind of try to get this part out of your mind. You could also use, like we mentioned at the beginning, the partial rise, the partial decline. So you could say, obviously, if, for example, if this came to here, we've come down, we've got a partial decline, so therefore you could argue that that's very bullish. So price action's not come back down to the range low, so it's very bullish. So you could say there's a likelihood that we could break out to the top of the range. So in a sense, yeah, you could use the touch points as an example there. Same with the short scenario. You know, if for example we've got a partial rise, you could say, well, that's bearish. You could argue that as long as everything else was perfect, i.e. the volume, the open interest and everything else, we might break down. So I'm hoping that clears that up. What else we got? I'm liking this, guys. We've actually got questions. We didn't have any questions last time. Good question, Baz. Right, here we go. Can we just do that? Yep, right, here we go. Example of how open interest and volume reacts. Now, I'm not going to get into the open interest because that's going to come back later on, and that's the more advanced stuff. Excuse me. On the volumes, again, the actual specifics of it is the more advanced stuff. However, as I've just showed there, with this example that we had over here, we saw the breakout. Zoom into a better time frame. High volume. So that is your classic example. You could probably say on the range that we had over here. Now, here's the anomaly. Here's the swing failure. So this, what happened the other day. Obviously, we had our range, and let's keep it as a tie range. So we had our range, we're trading our range, and we've seen price action break out on significant volume. Now, you would argue that, well, you'd expect continuation here, but what you've seen is volume quickly dropped off, and I mean quickly dropped off, and we've come back for a back test with volume increasing. See here. So we've come down, we've seen volume here just above the average. So we've seen that we're coming back down with a little bit of force compared to what we've had here. Now, we're now breaking through. Significant volume increase. Significant, way above the average. We'll come back down, and we've now back tested it, kind of, and we're now still range bound. So there's an example of a fake out. Now, if you want a bullish continuation, just like our current example, what you'd expect to see now is volume to carry on increasing. So this moving average here, you'd expect to see it moving up. The bars might not necessarily be huge and significant, but you'd want to see these moving average curl up, not curl down like it's doing right now. I'm hoping that answers that question, mate. If it doesn't, chuck me another message up. What we're gonna Hunter, not just on the range high or the range low, right? What's that in reference to, mate? I may have missed something there. Oh, hang on, we've got more people typing. Diplo, good question, mate. Well, Diplo's asked what volume or moving average do I use. I actually use the standard settings. There's nothing different within my volume. There's my moving average. It's just default. I just changed the colour. I rely less on this these days. I'm more on the footprint charts. But yeah, just for reference, it's just default. But we'll cover this. In fact, we'll cover this next time because you'll see why. The open interest bars, I promise that's going to come later on, but as I say, that's when we're getting on to advanced things. So I promise you, we will cover open interest. I may even touch on it on the next stream a little bit because the next stream we'll be talking about something similar. Journals, Rangers, flags. Flags will come later on in patterns. So I'll cover that one later on, mate. And I'm pretty sure, is that everyone covered off? Get another 30 seconds to see if there's anything else coming in, and if not, I'll wrap this up, guys. Got the big thumbs up, liking it. Another 10 seconds, and then we'll wrap it up, guys. Cool, right, so next stream. Some of you'll like this, and some of you'll probably be a little bit surprised by this. Let's get rid of that title, and let's bring up this title. Next stream, indicators. Obviously, you guys know that I'm not a lover of indicators. However, I do use them, and yeah, some of them you'll be surprised at probably. Some of them you won't be surprised at, and some of them you'll just think, why the bloody hell do I use them? And it's sometimes for looking at what other people are looking at. So we'll run through that next week. I'll talk you how to set up, for example, these templates that I use, which has got all my indicators on. We'll talk about the specific indicators like the VWAP, for example, in detail. I'm not going to teach you necessarily the technicals behind them, because you don't need to know that, but I'll teach you how to use them and how I use them. There won't be any specific strategy off that, apart from potentially one with a VWAP. But yeah, I think it'll be a very good stream for you guys. So yeah, set your reminders, 19th, same time, 7:30 British Standard Time. And aside from that, guys, over and out. Have a good evening. All right. Take care. Bye-bye.